Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon. And today we're going to have our weekly strategy roundtable discussion where we talk about current market conditions, talk about tariffs, talk about beautiful bill that passed the House, and what to expect next. If you're new to trading stock or options, I encourage you to visit the link on your screen. Disclosures are very important to understand the risk and suitability. And you can always pause the screen if you need more time to read the disclosures. Right, trading psychology is important, right? We're going to talk about this more, but before we do that, let's talk about current market conditions. So let's look at, let's do 1 day. So let's look at SPX, right? So we are right back to this main support and resistance level. This was the level that we basically tested in September, we tested in October the lows, we tested in January, and then when the tariffs announced, right, in end of March, this is when you had that sharp sell-off, and we broke through this level, right? We broke through this level in the beginning of March and then end of March, and now we're above this level, right? The 5,800. There's a lot of positioning at 5,800. Looks like it acts as a magnet, right? We were at as low as 576. We're now back to the 5,800. Based on the potential tariffs on Apple products and 50% tariffs on European Union, right? Escalation of tariffs, right? When we were de-escalated, we had a sharp rally, overbought conditions, not that far from all-time highs, and now kind of escalation, right? Every time there is escalation, it's a familiar trade. We see interest rates have a meaningful pullback, right? We have pullback in interest rates. Fears of recession, right? High beta stock like technology, QQQ, you have a sharp pullback in QQQ. And then you do have a rise in gold, right? Gold sharp rally and close to all-time highs again. So what's next, right? And Bitcoin, there was a divergence, short-term divergence. Bitcoin actually made new highs, marginal new highs. And did off the session lows, but we'll see where it's going to hold. So what's next, right? If you look at our model, Stock Forecast Toolbox, this was ran yesterday, right, at night, based on the closing prices. You can see that momentum is deteriorating. You can see, basically model doesn't see a lot of momentum above 600 level, right? So that's kind of the top, very large position. If you look at the gamma position, there's a very large positioning at the 6,000 level, right? 600 on SPX, SPY is 6,000. So this acts as a call wall, and we weren't able to break it, right? And now it's acting as a support. So the model basically says not a lot of momentum, 600. It doesn't see a lot of momentum below 580 either, right? Maybe 576, 577, and that's where we were this morning, right? Exactly 576. So model doesn't see a lot of pressure below this level. So that's your kind of tipping point, right, or reference point. That if can close above 5,800 on SPX, right, then this gap due to the 90-day delay in tariffs on China, then this holds. It's a long-term support, and then this is just a healthy pullback. Buyers will step in and drive the market back to 6,000, right? If bulls are unable to hold this 5,800, which is if you remove the 6,000 strike, because there's just a lot of positioning in that level. If you remove it, then 5,800 is your key support level, right? A very large position at 5,800. If you look at the just June expiration, let's look at June and July. So if you look at June, July, you have a very large position, 5,800, even larger position at 5,700. So a lot of it depends on interest rates, right? So let's look at this. Let's look at this again. Gamma exposure. So we're going into June, July. Let's do 50 strikes. So basically, in the live trading, we're always going through these different rehearsal exercises, right? On one standard deviation move between now and June, July expiration, right? So we're talking about end of June, going into the next earnings cycle or earnings season. One scenario, one standard deviation, right? Going back to our statistics class, right? Distribution curve, you have a very large position and one standard deviation, you can see it here, right? So scenario number one, we're breaking above 6,000, right? All-time highs, 6,200, 6,300, right? That's scenario number one. We're moving more than one standard deviation to the right. Maybe we reach an agreement with European Union at zero tariffs, right? And this was just a negotiation tactic. Maybe there is a peace between Russia and Ukraine, but right, some unusual positive news and the market moves more than one standard deviation to the right. Then scenario number two, we're trading basically in this range, right? 6,000, we've visited 6,000 and as low as basically 5,500, right? So that's scenario number two. Trading in the range, escalation of the tariffs, we're visiting 5,700, 5,600. And Nvidia positive. And I think Nvidia earnings is next week, so Nvidia earnings hits a home run. And maybe some improvement in tariffs negotiation with European Union or Mexico and Canada or Japan, and we are at 5,900 and 6,000, right? And scenario number three, right, we have signs of recession, right? Maybe unemployment rate ticks up, maybe some of the hard economic data shows the signs of recession, right? Kind of converges with the soft economic data. So then you have two standard deviation move to the left, scenario number three. So these positive and negative exercises, rehearsal exercises, they're very important, right? Because they can tell you, they help you determine what your position size should be, right? How much money are you willing to risk to support your opinion on the market? And I encourage you to do these exercises every day before the market opens, right? Go through positive scenario, and let's say you're bullish, you think 5,800 holds, you think we're going to revisit 6,000 or all-time high. How much money are you willing to risk, right? The question is, where's your stop level, right? And that will determine the position. And the goal is not to risk more than 2.5% of your account value per position. So let's go through this exercise, right? And this is June, July timeline. If you're a day trader, then you look at end of day, right? Or, if you hold in position for a couple of days, you look at, next couple of weeks expiration. All right, so let's go to this exercise. How many of you think we can make new all-time highs and break through the new all-time highs going into the next earnings season? Right? Maybe we reach agreement with European Union, maybe with China, maybe Nvidia earnings is extremely strong. New AI models from Google and Microsoft, and we're getting into the scenario number one. How many of you think no? There's for every positive news, there's a negative news. We're just gonna trade in the range between 6,000 and 5,500. And scenario number three, how many of you think that we will have signs of recession and we're going to move two standard deviations to the left, kind of revisit the recent lows, April lows? Two, Joseph, two, Andre, BJ, Ed, Carrie, Jerry, Joseph, Kevin, Michael, Steve, Fred, Bob, Teresa. Teresa, welcome back. How are you? All right, two. All right. Anybody 1 on 3? I put a pretty wide range, yeah. I mean, but that's how trading is, right? The trading is about distribution of possible outcomes, and 67% of the time, 70% of the time, it's one standard deviation move, right? So, assuming there is no really good news or no really bad news, we should be trading between 6,000 and 5,500. So I agree. I agree. What does that mean? That means that every time we get to 5,900, 6,000, you want to consider raising cash, selling. If 5,800 doesn't hold and we get to 5,700, 5,600, these are your buy zones, right? And this is where you want to add. If we're in the middle of the range, 5,800, then it's a flip of a coin, right? Next week we could be at 6,000. Next week we could be at 5,500. Right? So that's and my opinion is two. I'm gonna stick with two. I think 6,000, 5,900 consider selling, and 5,600, 5,700 I would be a buyer, right? I think these short-term pullbacks are going to be shallow, and buyers will step in. One caveat, one thing that I am concerned about the debt, right? The beautiful bill that's supposed to pass the Senate. I think Trump gave till 4th of July to reach an agreement. So 30-year yield, right? 30-year yield at above 5%, multi-decade high, trying to break out, and 10-year yield, approaching year-to-date high, not that far away from year-to-date high. So if the yields are stable and kind of trading in a range, I think buyers will step in. But if the yields start rising because of the fear of stagflation and higher tariffs and big beautiful bills is going to add $4 trillion to our debt, then the sell-off will accelerate. So I think the most important chart would be the yield, right? 10-year, 30-year yield. That's something to watch. Assuming that yields are stable, I think buyers will step in. All right, any questions? How do we help on Tradespoon? So we have different models, right? We have models for short-term aggressive trading. We have models for more of a momentum, longer-term trading. Stock Forecast Toolbox, this is where you can enter any stocks, ETFs. You can also enter futures, right? You can look at different products, and it will give you a trend. The most important will give you trend analysis. So you can see right now, short-term spiders are still short-term in uptrend. Medium-term, we're trading in uptrend. Even though it doesn't feel like today, but we do trade. We are still trading in uptrend. We haven't broke through the 580 level. Model doesn't see a lot of momentum in the next 10 days above 600, but it also doesn't see a lot of momentum below 576, right? So for that momentum to change, we need to break below 575, right, or break above 600, right, for the new signal to be generated. But for now, we're trading in this tight range, 575, 600. You can also zoom out to 6 months, right? This is where each data point is 1 month, and it's been updated on the first of each month. So you can see model sees that potentially we could revisit the lows in the next 6 months. I agree with the model. I think long term we could revisit the lows, especially with all the uncertainty in tariffs, and probably not going to reach an agreement. Maybe with European Union we can reach an agreement, but if we're having a hard time reaching an agreement with European Union, we're going to have even much harder time to reach an agreement with China, right? So if we start escalating rhetoric with China, then we will reach 500. But I don't think it's going to happen May, June. I think more likely, August, September, October, right? This is where we're going to revisit the lows. And on the upside, same thing. It doesn't see a lot of momentum 600. For the month of May, it sees 562 is overhead resistance. Obviously, we reached an agreement with China, 90-day delay. So now what used to be an overhead resistance is support. So I would watch 565 on spiders, right? So as long as spiders are above 565, we're still trading in the uptrend, right? That's the gap, the liberation, the 90-day pause gap. If we drop below the support level, which is also was November lows, close to January lows, if we drop below 565, then I think this trend is broken, right? This trend is going to be broken back to reopening to to the lows. So as long as we're above 565, probability of reaching 500 is low. But if bears are able to close the gap and push below 565, that opens the door to the revisiting the lows. So that's something I'm keeping an eye on. So we have stock forecast toolbox to help you make these determinations for any stock. I mean, you can put JP Morgan, you can put General Electric. Right, so it'll give you all these quotes. You can manage your own portfolio, type in symbols. You can look at the company screener, right, to show you which sectors are in strong uptrend. Insurance companies, some of the insurance companies are in strong uptrend. Metals and miners, right? We have GDX, platinum, palladium are in strong uptrend. So that's some of the sectors. Again, this is data gets updated on monthly candlesticks, so these are long-term trends. That stock forecast toolbox. We do have models. So active trader every day will show you, bullish and bearish trade ideas. There are no bullish ideas. Model doesn't see any bullish opportunities going into the event. It does see bearish, like United Healthcare Group, right? You can clearly see that UNH is under pressure, until, we get some positive news. You probably want to sell into the rally, right? Sell into the rally. So you get short-term trade idea, long-term trade ideas, right? Bullish, bearish. In this example, this is a bearish idea where you would sell short 319 and exit at 314, right? And again, 1% stop loss. When VIX jumps above 20, right? Today it was 25. VIX is at 25, then maybe instead of 1%, you make it wider 2%, or if it's high beta stock. But that's how you would use these signals, right? They're active traders, the signals are generated daily. And if you want to leverage, you can always go into options, right? But same idea, no bullish trade signals, and just, you want to trade put, right? You want to, if you want to have limited risk in the market, then you just buy a weekly put, expires either this Friday or next Friday, depending on your trading style. But the levels are the same, right? 322, $4. So that would be the put level. Any questions on the active trader? So same thing, weekly trader model runs on the weekly trader and monthly trader model runs over the weekend, right? On Sunday. So we're posting these results on Sunday. And going into the Sunday, EQT, right? One of the trade ideas, EQT. And so on Monday, which was what, 20th, 19th. On 19th, you can, buy a stock, you can buy a call spread. Right now, I mean, it was up and now it's kind of flat, right? So same thing. But the only difference is it's a different model, and then the target gain stop loss is wider, right? Instead of 1%, now it's 2.5%. Because the idea is you can hold these positions for a few weeks, right? You don't have to, this is not day trading. We're looking at the 10-day vector. Signal, can last a week or two, right? So that would be the weekly trader and also monthly trader, right? Same idea. So those are the signals and the tools that you can use to manage your own portfolio, right? If you're looking for trade ideas based on AI signals, you can use them. If you want to have access to live trading room and see what Keith and I are trading, then you can participate in Elite Circle. We have a morning bell every day, first hour of trading session and last hour of trading session. You can watch all the recordings from the live trading room. And you can also look at all of my positions, right? So right now I'm trying to close TJX order. Let's look at some of the last 7 days. I closed, partially closed Abbott position, right? So I got into EQT spread. So it's a combination of short-term trading, right? Like TGX, this was earnings trading, medium-term trading, Abbott, was a signal, stock signal, and options, right? EQT, right? So I traded EQT option spread that expires in June. So I'm long and trying to exit it at $4.40. So that's example of where you can have access to my portfolio, look at the orders, look at the position. You can enter your phone number or Discord address, and we'll send you the Discord messages or SMS messages every time I trade, right? Every time there's a change in these orders or positions, you will get a notification. And it's real-time data synchronized with the broker-dealer account. Any questions? So Elite Circle, I mean, there are stock and option trades. If you're just looking for option trade ideas, once a week we have premium portfolio, spread trader, kind of similar. Same thing. This is where the EQT trade came in, right? Basically tells you what strikes to buy. If you're not comfortable trading spreads, you can buy single option, right? If you're not comfortable trading options, you can just buy a stock, right? So then that's the premium portfolio. A lot less trades, and one new idea a week, one new trade a week. Robo investor, same thing, kind of one trade ideas every other week on stocks. So you can see all of my orders, all of my positions, and these are just stock trades. Stock trades. Any questions? Uh, all right, so we talked about different portfolios: premium, robo, elite is everything. We do have research, right? You can see we have seasonal charts. Right? Not a lot of negative correlation, right? We had a very sharp pullback in April. We haven't had that since Great Depression, right? Such a large pullback in April. April usually is a strong month. Model shows low. So you do have seasonality charts. You can look at the probability calculator. Right? So basically same thing based on historical volatility. 80% of the time we are trading between 555 and 600, right? And that's what we see in options data based on position. So very similar. And then our model, you can see the results, in terms of probability. So that's the probability calculators, some of the screeners. In terms of free content, we have all the education is free. We have getting started guide. You can go into our newsletters every week. We publish several newsletters, videos on market conditions, trade ideas. So I encourage you to add info@tradespoon.com so you can get our daily emails or videos. What else? We have a YouTube channel where you can see the videos here. And learning center, right? So if you're looking for technical analysis videos, options basic, it's advanced technical analysis, trade management, you can find all these lessons are here. You can find all the different webinars, longer term webinars on these topics here. So this is the learning center, which you can always find here. Any questions so far? If there are no questions, this is all the content I wanted to cover. Let's see where the market is now. A similar pattern, bulls. Everybody's scratching their heads and seeing if this level will or will not hold. For now, it's holding. Let's see how's Bitcoin doing. Bitcoin is also off the session lows, so that's good. China is actually turning positive. Copper is positive. Some metals and miners rallying along with gold. Small caps above 200 levels, so that's positive, right? A key support level here, and QQQ is above 500 level, which is also key support level. So I would watch these levels, right? These are very important, strong support levels. And going into the long-term weekend, right? We have a long weekend. Monday is off, Memorial Day. It will tell kind of, could be a good sign, right? If we close at the session lows, 576, 57, 67, then I think it's bearish. If we close closer to 5,800, that would be bullish. All right, we have a lot of people today. This is great. Andre, BJ, Don, Ed, Harry, Jerry, Joseph, Kevin, Robert, Steven. I mean, dollar is stable, right? I mean, obviously it pulled back today, but it's not making new signals, right? So trading away from US kind of exceptionalism that's been on pause. Obviously today it's the trade continues, but still no new signal. Just like in 10-year yield, there's no new signal, and that's bullish. 30-year, there was a marginal new high, right? We're right to the penny of the peak of the 23 sell-off. So, hi, Robert, how are you? Jay, BJ, Don, Ed. So a lot of people just joined. A couple more people just joined. Um, so that's all I have for today. Robert, I don't know, did you join just now? Do you want me to go over something? Because I was planning to finish now, but I can repeat. I think most of us were here most of the session. Anything you want me to repeat? So I think the most important right now, I personally think that buyers will step in, right? Buyers will step in, and this level will hold, right? But if we do break this level, then it does open the door to 5,500. I think 5,500 level will hold, right? If this level doesn't hold, then we could break it today. But if I think 5,500 level will hold, right? Because this is a much longer term support level. The only risk to the market, I don't think it's the tariffs on European Union, because probability of 50% tariffs on European Union is very little. But the beautiful, bill that about to, be passed by House, now moving to Senate, adding $4 trillion into the deficit, and the Treasury auctions did not go well this week. That's why we had a huge rally interest rate. I think that's a big problem, right? I think that's a problem. So that's something to keep in mind. So that's something that I am carefully monitoring. The 30-year yield, right? It's off. I mean, we were as high as 515. So it's a positive sign. If it's a false breakout, it's good. But if next week rates 30-year makes new highs, 10-year makes new highs, right, above 460, 480, that would be bearish for the market. Oh, Robert, you're here. Okay, got it. All right, guys, have a great weekend. Thank you for joining. Enjoy your time with friends and family. Everybody who served the country in the military or been in wars, thank you. And we'll see you on Tuesday. Keith will be at the closing bell. Thank you very much.